Assalamualaikum warahmatullahi wabarakatuh. My name is Noor Elina Natasha binti Badrul Halim, metric number S67800. I will be doing the presentation for individual assignment, the key audit matter from the independent audits report of Gamuda Berhad. So the first key audit method that is identified in the independent audit report is revenue and construction contract costs recognized as contract expenses using the percentage of completion method. This requires significant judgment in estimating project progress, determining cost to complete, and accounting for variations and potential penalties because the estimation are complex and prone to error or bias. Even the small changes in estimates can significantly impact financial results. The potential ethical issues is the risk of manipulation because management may overstate revenue and profit by manipulating figures due to the accounting policy, which is the revenue and cost recognized using the stage of completion method and based on estimate of costs incurred and total contract costs. The inherent risk could also arise because high exposure to manipulation due to reliance on estimate and potential for unjustified revenue recognition. The impact on financial statement is overstating profits, inflating assets, and understanding liabilities that could misleading stakeholders about performance and financial stability. The audit procedures to prevent this manipulation is by evaluate construction progress, by examining supporting evidence, and strengthen internal control to ensure reporting accuracy. And the preventive measures that could be taken is enforce strong internal controls and conduct regular audits, keep detailed records and encourage ethical behavior, and lastly provide whistleblowing mechanism for transparency. The second key audit matter in the independent audit report is revenue and land and development costs, which is recognized over time using the percentage of completion method. The potential ethical issues is conflict of interest because stakeholders may pressure management to present favorable financial results. And the second potential issues is auditor independence because close relationship between auditors and management can compromise objectivity and lack of independence may affect audit judgment and reliability of financial reporting. So the impact on financial statement is misleading revenue and profit figures may mislead stakeholders about the company's performance. And the non-compliance with standards is the failure to follow MFRS 15 revenue recognition can lead to penalties and incorrect financial statement may result in poor decisions by investors and creditors. And how to prevent this is by audit procedures based on ISA 330, which is auditors should review more samples, conduct site visits, and use data analysis to mitigate risks. The last key audit matter is the impairment of property, plant, and equipment in a subsidiary. The continuous losses trigger the need for impairment assessment. Estimation method is by recoverable amount estimated using the value in use method. The subjective judgment is involve complex assumptions about revenue growth, economic conditions, and the discount rate. The potential ethical issues is the management bias because of the property development revenue recognized only to the extent of development costs. Refer to the financial statement, not to the financial statement. The management may manipulate records by overstating revenue growth or understating discount rates to meet financial performance target. The second ethical issues is auditor independence. A close relationship between management or conflicts of interest can impair the auditor's objectivity. The non-audit services provided by the auditing firm may compromise independence, leading to less scrutiny of key assumptions. This could impact the financial statement due to the lack of transparency. Inadequate disclosure of assumption and judgment in financial statement raises ethical concerns. Stakeholders rely on this disclosure to understand management rationale and assess financial health. Opaque or incomplete disclosures mislead stakeholders and hinder informed decision making. So, to ensure ethical practices in preparing financial statement, is by auditor must maintain independence and professional skepticism and promote transparency through comprehensive disclosure and external regulatory oversight.